Can you hear me now? Uh, Can you hear me now? All right. I hope you're well. I'm good. Um, if we hear the noise in the background, that's just my dog, so I hope you don't mind. So, last week we ended up on order blocks, and since it's a new week, since we're in a new week, I think maybe we can just look at our favorite pairs and see what's happening. The pound yen and the pound USD. So let's start with pound USD. The last time we talked, we were expecting it to go higher a little bit more, so that's good, which it did. So we're just going to look at our weekly candle to see how it closed. And we can use it to our advantage. So the weekly candle closed very bullish, right? Which means we can expect this week to be bullish also, especially considering that if we go on the monthly time frame, the same thing we highlighted last week. Our next high should be here around this area. Should be around this area. Let's just put it there. So that means we can expect this weekly candle to push a little bit more higher to reach this area, but then for it to go higher, that means it has to break a monthly resistance. Yeah. So right now, price is pushing higher, which is good. And considering how the last week's candle closed, right, and the week previous to that, we can expect a candle similar to the one before, or even this one also. We can even look to get a candle like this one or this one, the one that happened last week, to fill up this gap. But then that means price cannot come back down and break its weekly opening. So that means if you were to go on the 1 hour time frame, right, if we check where the weekly candle opened, it should be right here, somewhere around this area. It should be somewhere around this area. I think, let me check the date. Yeah, it should be around this area. That means price cannot go lower than that. If it goes lower than that, then that means price might have chances of going lower and then going back to retest this support and then continue going higher. Because remember, last week we discussed how price had to come back and retest this support, but price didn't. It kept going higher. It kept pushing higher. So what I'm trying to say is, if price, since when we started this week, right, price started pushing higher. It didn't go lower. It started pushing higher. So if price pushed higher when the candle opened, right, that means price it's very strong bullish pressure, right? But also, if we look at our previous candle, the structure it has, the way it formed, we might be looking into having the same formation on this week's candle. So that's what I'm saying. If price breaks the low of this week's candle, like the opening of this week's candle, and then it goes lower, then price might have chances of coming back to the resistance that it broke out of 2 weeks ago. Because price hasn't retest on the weekly time frame. It might have retest on the 4 hour, 1 hour time frames, but if we look at the daily and the weekly time frame, they didn't retest. I know the daily didn't retest because this candle doesn't have a lower wick. So price didn't exactly retest on the higher time frames. That's why I'm saying if price comes back and closes below, or if it starts trading below the opening of this week, then price is high chances of continuing down to retest that resistance that we broke 2 weeks ago. So this is what we have on the weekly. We don't need too much. And then if we check our daily time frame, it's still the same thing that we just discussed on the weekly time frame, because this is the resistance that we broke out 2 weeks ago. Price hasn't been doing much. It's been going higher. It's been pushing higher. However, it's not that big of a movement. It's still the slow correcting moves. So price did retest on the daily time frame. This was our retest. And then it did range, and then now it's pushing higher. So if price pushed higher, pushed higher, I'm expecting a range somewhere around this area. If it doesn't, then we should see price push higher to the next resistance. Then on the 4-hour time frame, so this is our area where it starts getting interesting. So remember when we talked about impulse waves, we talked about how we can have a wave inside another wave. So right now we could say we have one. Okay, right now we could say we have 1, 2, 3, 4, 5. So this was a wave, right? An impulse wave, and then we had a correction, this one, and then we could see it, or we could read as another impulse starting, because it broke out of 5 right here, and then it did range, showing strong bullish movements coming. It ranged over there, so that means this could be a new impulse forming. So price cannot break below the opening of this week. This was our opening of this week. Price cannot break this low. If it breaks this low, that means price is breaking out of our trend right here. See? So we have the confluence of the support that was created when price broke out, right? And then we have the trend. So now we have two confluences. If it comes and give us a very strong bearish candle, we might see price continue going lower to even this level. So it might come first to this level, but it might even continue to this level just to retest on the weekly time frame, and then it will continue higher. So for price to stay bullish, we cannot break price around 139,820. It has to stay above. So this is our analysis that we have so far. If we look at the 1 hour time frame, okay, we'll have to plot the high that was produced today. So price, for it to continue going high, it has to break out of this. It has to break out of the resistance that it created today. And then for price to go lower, it has to break out of the support. So this is literally today's price movement. This was literally today's price movement. So remember when we said this might be the new impulse happening. So we have 1, and then this could be our 2, and then it will continue going higher. So if you were trading pound USD, then all we're expecting is price to go low. If it goes below and closes below, it has to close below, then price might come all the way down here. But then if it rejects the support and then comes all the way to the resistance, then price should continue higher. Same thing if you look at it on the 4-hour time frame. On the 4-hour time frame, we said price can break below, right, and then come all the way down here, but it cannot break below this support, because this support was created when the new impulse started, and when price broke out of that strong resistance that we talked about a couple of weeks before, 2 weeks ago. So it has to reject this resistance. If price doesn't reject this resistance, then it's breaking our trend, because we had this impulse and then we did a correction, and then we need another impulse before we can come back for another correction. But price cannot break out of our trend that was created right here. So These are very nice trades to look out for in the week. You can look for a rejection, or you can look for a breakout of the area that we are at right now, right? And then when price gets around here, look for a rejection or for a breakout. Because if price breaks out, it's going to follow. If price break out, it's going to follow the same price action that happened right here. That's what's going to happen. And then we said if price reaches this area, right, it might even break to reach this area because price broke the trend. So we have this confluence of the support, and then the trend line is the confluence, right? And then if price gives us a strong bearish candle right there, we have 3 confirmations, and then clean traffic, that's your 4th confirmation. So that's a pretty good trade to look out for this week. But we need a break around this area. If it doesn't break, then we might see price going all the way to the high that our next resistance, which is all the way up here, and then from there we should see price continuing lower, coming back to break the trend. We should have to break somewhere around here. But yes, that's what we have for this week. That's what I'll be looking for this week. Because remember, you don't have to catch a lot of trades. You just have to catch that one big trade that will give you the profits that you need for your week. You don't have to catch a trade every single day. You just need to catch that one big trade. So if we are looking at order blocks, well, continuing with order blocks, now let's continue with order blocks. Remember, order blocks, last week we said order blocks is the area where it's an area that's very similar to support and resistance, only that an order block is an area where banks or big companies placed their big trades. So remember when we discussed how banks place their trades, right? They cannot place their big trades all at once. They have to place their trade, price move, and then just to come back, fill some of their trades, move away, and then come back and fill some of their trades again. Because they need enough, if price is selling, they need enough buyers, and then do you remember where I left up, or where did you last hear from? Can you hear me now? Do you remember where I left off? I mean, where you last heard from? No, okay. All right, so how about if we start on order blocks? All right, that's great. All right, so I was saying, Ocean, see it. So I was saying order blocks are very similar to ranges or consolidations, but they have to be very small, and they have to happen at a very significant support or resistance. So you need support and resistance. It's like you need supply and demand, things like that. And then they have to happen as a very small range. This is a consolidation, right? If you were looking at price, this would be a consolidation, right? That's fine, or the bigger time frame, right? But then if you are looking for an order block, right, you need a very small range similar to this one. This is a very good range. This is also a very good range. Something like this was a range. Like, those are good ranges to look for order blocks. Why? It's because, remember last time we talked about how banks or big companies need to fill their orders, right? But then for them to fill their big orders, there's not always enough buyers or sellers in the market, because if they want to buy price, right, they have to be enough sellers in the market for them to buy and for price to keep on going higher. And if they want to sell, there have to be enough buyers for price to keep on going down, because for one to win in the markets, one has to lose. So when they place their first big order, right, there are areas that are created. That's when an order block is created, and it normally happens when price creates a very small range and then a big candle. So that would be very similar to this area. If we looked at this area, right, price created a very small range and then a big candle. So if you didn't have any of this price action before, right, you would have you would be here with this candle only, right? Looking at how strong this bearish candle is, you'd expect price to continue lower, right? But price didn't. Price made a low right here, right? And then it came back. All right, let me remove this. Price made a low right here, right? And then it came back to close at this level, right? And then it created a range at that level, and then the next thing you see is a big bullish candle. So this means when price came back to close at this level, right, and then it kept on rejecting to go lower. If price keeps on rejecting to go below where the previous candle closed, that should show you a sign that price has high chances of buying than selling. Price has to go lower where the previous candle closed for it to continue going, for it to keep pushing lower. And then for it to keep on pushing higher, it has to break the high of the previous candle. It has to break the high of the previous candle, right? That's the concept. So when price didn't break this low, right, and it stayed around this small range, and then this big candle followed, that's how the order block was created, because price was only ranging around this area because they didn't have enough sellers for price to go higher. Remember, they need enough sellers for price to reverse and start going higher. So this candle was to trick retail traders into thinking price is going to continue going low, because this is a strong bearish candle. We had a strong bearish candle here, then we had some sort of a range, and then with another strong bearish candle. So the only thing, if a retail trader was analyzing, right, would see this range and would expect price to keep on going lower, because it's a formation that it's been repeating, and would expect it to repeat that formation. But the fact that price didn't go lower below the closing price, that showed us that price had more chances of rejecting this low and going higher. That's how you know if a trend is finished and a reversal is coming. As long as price doesn't break that high or that low, then a reversal is coming. Because even when price reversed right here, right? So what happened is we created this low, right, where price rejected, and then price came back up, and then it created this support, right, and then it pushed higher. So this was our order block. This area right here is our order block, right? And then remember when we talked about this area, so remember we said we need a small range at an area of significance, significant support or resistance, and then we need a big strong candle pushing in the direction of the trend or against the direction of the trend to show a trend reversal. That's how the order block is created. Like for example, this area right here with a very strong trend going on, right? If you look at this, there's a very strong trend, right? And then when price reached this area, it created a low, and then price came to create a high. So this is how you know a high was created. This is how you know a high was created. See, this price had a low right here, right? But then this low was broken when price came all the way down here, right? But before it came all the way down here, it created a high right here. So we had a high that was created right here. So this candle created our range. So price played within the range, and it rejected the high of our previous candle. So with our first sign that price was showing some sort of it was dying out, the bullish momentum here is dying out, because we had a bullish candle, we had another bullish candle, but then we had this very small inside candle on top of that that's showing a reversal sign inside our previous candle. A candle that happens inside the body of the previous candle is a very dangerous candle, because it can be a reversal candle, but it can also be a continuation. So you always have to watch how the candle is closing, right, and where it's closing, because if it happens, if you have an inside bar, an inside candle in a very strong trend, then price is most likely going to continue. But if you have an inside bar, it has strong support or resistance, then price is most likely going to reverse. It's most likely going to show a trend reversal. So if you look at our left, right, price actually had a support created right here, right, and then it broke out, and then it came back to retest the support that it had broken, right? And then we got this reversal candle, right? So when this big bearish candle printed, it was showing us an order block, because when price gives us a strong candle, right, whether bearish or bullish, right, it's showing that the bankers or the companies, they got enough buyers or sellers to push price in the direction that they want. If they don't have enough buyers or sellers to push price in that direction, then the candles can't be strong or big. There will be small bodies or very long wicks, too many wicks, and very weak bodies, similar to this price action right here. See, we had a range, right, a small range right here, and then price gave us a strong bullish candle, right? But then the candles that are following up after that, they are not strong, they are very tiny and weak. So if you see candles like this, right, they're only showing a trend reversal. They're telling you that the trend is about to finish, because if the trend is still healthy, then we get big candles like this one and this one. But if the candle is unhealthy, then you get these small candles or these small candles. So that brings us back to that point, the order block we were talking about around that area. So we had this order block created right here, right? So in our teachings, we know price has to come back to that price that it created the order block, or something very close to that price, and that's what it did. It gave us an order block here at the bottom. See, we created a low right here, and then price came back to retest or to collect more orders on the order block that was created right here, right? That's how you see price rejecting and coming back all the way down right here, back to our order block that was created. See, price is still failing to go even below the low of this candle. It did make a low right here, but it didn't even break out of this low that's right here. You have to take note of that low also that was created right there. Price still failed to break through that, right? Meaning there was an order block at this area. So they might have placed their biggest trade around this area, right? And then price reversed, so it came down, it reversed on the smaller time frames. That's why you see the reversal signs, right? And then price came back to range here and then continue higher. But then when it was continuing higher, the candles are very tiny. They were not showing a strong reversal. They were not showing a strong trend. That means that's telling us that maybe this is just a correction. And when price came all the way down, gave us a strong bullish candle, but the next candle is an inside candle, right? It's an inside bar and it's bearish. And it does not have a bottom wick. That should tell you to wait. Whenever you see a formation like this, always wait, because prices chances of going lower like it did, or it can also break higher, because we don't know, maybe the trend was weak here because they were still collecting orders, right? And then when they had enough orders around this area, price could have kept on shooting higher. That's what was supposed to happen. But the fact that the next candle was a bearish candle, an inside candle in that matter, because it didn't break the high or the low of the previous candle, that should tell you to wait. Always wait. It's best to wait in this situation because it can go anywhere. In this instance, it reacted to our previous order block that was created here, right? And came back to our support, where we have an order block where price rejected again. So price collected orders here, right? And then it went higher. They took some profits, price came back lower, and it dipped again. So what I can take from this dip, because this dip actually broke the previous low, the one that price couldn't break, it created a new low. And then for this dip, it could be a liquidity grab, because they might not have had enough sellers at this point, so they might have tried to show people that price is buying, right, for people to buy here, and then people bought here, then they push it lower, a strong bearish candle to push it lower to fake people into buying, because when price came all the way down there to break this low, a lot of people would have entered, especially with the fact that it's also breaking this low. A lot of people would have entered, and they would have even placed more sales around. So some would have entered when it broke, right, and some when price came back all the way up, they would even place more sales when this candle happened, thinking that price will now go down. But this people placing sales, it's what they wanted, to collect all of these orders for price to keep on going higher. So your confirmation not to sell would have been the close of this candle. It might have broke the low of this previous touches, right? But the closing still came to close above. It didn't close below. It still came to close above. So if price still comes back to close below or above that high or low, then that should tell you that the trend is refusing to continue in that direction. Because if price was going to continue in that direction, then price would have stayed above or below the high or the low of the previous candle. So that's what happened. So as long as price kept above this support, it was pushing price higher, and then price continued higher, right? This is actually a better trend if you look at it compared to this one. This is a much stronger trend. It's a better trend, right? So when price shows you a better trend compared to a trend previous to that in the same consolidation, always match the trends to know what market is doing. If price is showing us a stronger trend, right, I wouldn't expect it to reject strongly on this high. I would expect price maybe to reach the high, right, reject it to retest the resistance that it broke last time and then continue going higher, so that it gives us a formation similar to this one. I would expect that, maybe. Otherwise, because if price wanted to give us a weak trend that would get price rejected, it would have created something similar to this price action and this price action. This price action and this price action, they are very similar, but this price action is different, meaning price might be ready to break through of this order block that's right here. Then price will come back to react to our order block that's right here. See, whenever you see a strong impulse and then a range coming afterwards, there's an order block that's happening, because if we look at it, right, price broke and this came to create an order block here, meaning there was an order block that was created here, and if price is still reacting to the previous high, there's an order block somewhere there. For every impulse, if you want to find a perfect order block, right, look for an impulse and look where the impulse began, right? So it's like similar to this. We had an impulse, right? The impulse started right here, so this is where your order block would be. So this bullish candle right here is your order block, right? So if you're now looking at price here, this is your impulse that's happening, right? Possibly, because it hasn't broken this high yet, so we don't know if it's an impulse yet. So when it breaks that high, then we'll know if it's an impulse. But if it turns out to be an impulse, when price starts rejecting, let's say it rejects price around here, right, and then it starts coming down all the way to our support, right, always look for them for where the impulse started, which is around here. So this would be our order block. See this candle, right? The candle before the candle before the candle that pushed, that made the strong push in the direction of the trend, that's your order block candle. So you have to look for the candle previous to the one that pushed in the direction. That's why we said this bullish candle was the order block, and then around here would say this red candle, right, pushed in the direction. So this pin bar would be our order block. This pushed in the direction of the candle, right, and then this candle followed. That means this bullish candle would be our order block. That means this tiny candle is our order block. So always look at the candle before the one that pushed in the direction of the trend. That's your order block. But if price is coming to your support or resistance, or to where your order block is, and it's showing a strong trend like this, it's always best to wait and watch what's happening, because it might react to that order block, or it might break out. It might break through and react to the next one. But yeah, that's on order blocks. Do you guys have any questions? All right, that's good. I'm not sure about the others though, but that's good. So that's great. So if we want to use order blocks to trade, right, if you are trading on the 1 hour time frame, you look at the 4 hour time frame for the order block, and then you trade it on the 1 hour time frame. So if we were looking for a trade right now and we're doing this analysis on the monthly time frame, right, we would have to go on the weekly time frame for us to get a trade. Not to get a trade, but if you want to enter the trade, we have to use the weekly time frame. You always use a time frame that's lower than the one that you were doing the analysis on. So if we look at the weekly time frame, right, see price is pushing higher, like we mentioned when we did the analysis. We said price has high chances of pushing higher, so we might see price reach this resistance, right? And this is where I'm saying we might experience some. This is where I'm saying we might experience some rejection when price reaches this resistance. And so this is the monthly resistance that we're talking about. So we're saying price, since price keeps on pushing higher, right? Since we might get a candle similar to the previous one, right? We might get a candle like this one on this week's candle, and it might reach the resistance on the monthly time frame. So this is where I'm saying we might see price reject this resistance, right? Come back to retest the resistance, now support, and then continue going higher. So on the weekly time frame, right, for this week's time frame, we talked about this this support. This is where price cannot break if the trend is going to continue. But if the trend breaks on the weekly time frame, was it the weekly? Oh yeah, this weekly. Yes. So if this support, if price breaks this support, right, we have to expect price to reach this support. All right. And then on the bigger time frame, on the monthly time frame trend, right, this is the support that price cannot break. If price breaks this support, right, expect price to drop all the way to the next support, to this support, and that's correcting, I think, like a year move. So I would highlight this resistance. I would strongly highlight this resistance, this support and this resistance, because for price to continue bullish, price has to break this resistance. For price to go bearish, to be fully bearish, price has to break this support. So whatever price does around this area, right, no matter how much price dips in this area, right, look for buying signals, because price could just be doing what it did here. See, price made a strong move, right, made a big dip, strong move, made a big dip. So we might just get a strong move, right, a big dip, and then a strong move next, if that makes any sense. So I would highlight the opening of this week, right, and then the support that price cannot break for it to continue bullish. So if price comes back to this support, right, if comes all the way down to this support, right, you would be looking at for reversal signs. But if price doesn't give you reversal signs and it breaks, right, and then you're expecting price to reach this support, and then you're looking for reversal signs. If price doesn't give you reversal signs, then you're expecting price to continue dropping, right? So whatever it does under this, well, that will be a resistance at that point, right? Always look for sales. The same way you're looking for buys whenever price dips, you would have to look for sales. So if price makes a low, comes back up, right, always look for reversals for price to sell more, and then to sell more, right, it will come back for another, it will retrace to make another high, right, then it will make another dip. So knowing how your trend is going on the bigger time frame is good. Not saying use that information for your everyday trading, right? Highlight the areas that are very important. Those are the support and resistance, right? And then as long as you know what's happening, right, you can trade whatever you are seeing for that day, as long as price doesn't reach the areas that you're looking. So you're highlighting them so that when price reaches those areas, right, then you know what you're looking for at that area. So you can still trade your everyday trading without having to look at all of the time frames, because when you look at all of the time frames, right, then you're confusing yourself. You might end up reacting to things that are not valid for that moment. So we highlight them so that we can react to them when it's valid, because we can't use information like I'm expecting price to reverse around this area at this moment, because price is going higher. So if we go on the 1 hour time frame, like we explained earlier, considering we're almost out of time, on the 1 hour time frame, when we did our analysis, we talked about how we were expecting price to either break the high or the low. So price rejected the low, right? If price wanted to go lower here, it would have, but price still came back to close above. See, price made a low, right? Rejected. Then this price made a low again, but still closed back in the range. This was showing us bullish sign. So either you had placed your buy stops here, or you would have bought when price closed. It was two good signs. We had two confirmations there. So we were already expecting price to go higher. So since price is broken out, right now, if we're trading on this 1 hour time frame, we can expect for price to retest and then continue going higher. So when price continues going higher, right, we will know when it reaches our next resistance, which is there on the monthly time frame. That's the next resistance. So price can do whatever it wants in this area. Price can make a high, make a low, make a high, make a low, make a high, but you have to highlight this now support, because for price to keep going higher, price has to stay above this support. So if you see price making a high, then makes a low, and it doesn't come anywhere to this support, then expect price to keep on going higher. So you'll be looking for buys. So when you wake up in the morning and you go on the charts, right, by looking at where price at and where your most important zones are, right, you should know what you're looking for. So if you were waking up right now, right, you're seeing price broke above, right, you're expecting price to retest, establishing our support. That's it, creating support, and for it to continue going higher. So someone who's coming on the charts right now would be looking to buy, not to sell. Never sell when price is printing strong bullish candles, and never buy when price is printing strong bearish candles. It doesn't make sense. It might be a good way to try and catch a very nice entry, but it doesn't work in the long run, because if you buy when price is printing strong bearish candles, it's most likely that it's going to continue lower. It's not going to give you as much pips as you want. So if you open your charts and you see price printing strong bullish candles, look to buy. So you wait for price to create support and then buy. If you open your chart and it's creating strong bearish candles, then look to sell, because price is pushing lower. Only when price starts printing, if it reverses and it starts printing strong bullish candles and weak bearish candles, then you can start buying. So always wait to see where price is creating where it's showing its pressure, where it's showing its higher pressure. Do you guys have any questions? That's great. How about the others? Well, I'm going to assume they're fine since they're not asking any questions. So I think that's it for today. I hope you guys enjoy the rest of your day and take a break. It's very important to take a break. But yeah, that's all. We have another one tomorrow. Thank you. Thank you, guys. We'll talk again tomorrow. We should have another one tomorrow. Probably around the same time, if that's okay with everyone. But yeah. Bye, guys.